Hello, traders, and welcome to today's live event. We're going to try and do these every Wednesday, about 2.5 hours into the open. We're going to cover market analysis. We're going to take a look at for some stocks to see what's setting up. And let me give you a very quick glimpse of how the screens are set up. I'm going to be putting up charts when Harry's got some comments to make. The chart that you see, the primary chart, is the stock chart, and in the very right hand side you'll see the 5-minute SPY chart poking out. So you'll see me flipping between both, but this way at all times we know what the market is doing. Harry, how are you?
I'm pretty damn good. How are you?
I'm good too. The market's kind of compressing, so we all get kind of complacent and bored, and we're just in a holding pattern waiting for some material news to come out and to drive this market.
Yeah, I mean, with tech earnings coming out next week, I think that's going to be a potential mover.
I agree. At least, from what I'm reading and the vibe that I'm getting, I think that they're going to post some good numbers. And, technicals for us mean everything. So technically, might as well take a quick technical look at the market. D1, get our bearings. It's how we like to start everything off. The green line here is a VWAP-Q. And you can see how we are right on that level right now. We're probably about 20, 30 cents below it. But the market has been moving sideways so far this year. That was the high from year end. We pulled back a little bit, and then we launched right back up to that 2023 high, actually took it out a little bit, and we're hovering around. And right now, it just feels very bearish and very negative. And as soon as you go into these news vacuums, all those nasty headlines that get you thinking in bearish terms start surfacing. And so I think we're going to talk a little bit about that. And we've got the really important, really big news. The news that's been driving all of this is going to be coming out in about 10 days or so. So we've got to be patient in here. Let some of these gains be worked off. Some of these profit takers, give them a chance to exit the position. Eventually buyers will overpower them, and then we get the next leg higher.
And
what are your thoughts?
On that gap up there on 1114 on the daily for SPY, there's no wick on the bottom, but if you just draw a low plus line, just going straight from the bottom of that L14, going right up, you'll see it's there. It's right on that support line there.
Right like that.
Yeah. It hit it today, bounced up off of it. That line there seems to be providing some, I don't know if it's going to be a lot, but some support for the market at the moment. But it's there, just to point out.
Yeah, and we've got, if I put up the 1.0 squeeze indicator, you can see that we're starting to compress right up in here, and we're still compressing. We do have this little bearish 1OP cross. I don't use 1OP very much on a D1 basis, but it has been really in sync with what the market's doing. We're still in a very long-term bullish cycle right here. So I'm looking for this compression to perhaps even attract some shorts. And the more shorts that we attract and the more that it looks like we're going to get this breakdown, the greater I feel the likelihood is for a big run up. And they start covering those short positions as we get to the high of the year. And then they have to start closing those down for a loss. And that's what actually fuels the next leg of the rally. The reason that I feel that way is not because of what I'm seeing here. And this is a really important point. This is not what I'm looking at. This is what I'm looking at. This is what tells me that we're going higher. No dips in here at all. Any red candle instantly reversed, and we only had a handful of them. So that price action is what I'm leaning on. If we start seeing big deterioration, long red candles off of the high, okay, something has changed. But even then, these buyers are not going to be deterred. We're still going to get a bounce. And then when we make a lower high, okay, that's a time when we can adjust our swing trading positions, exit them. Yes, some of them for a loss, but we've been long in here, so should be locking in gains on them. But yeah, until we see evidence that tells us that this is a market top, we go with the information that we have available to us, which is this, and that is very strong.
I get a lot of chatter here on the institutional side of, I keep seeing the acronym WIRP, which is World Interest Rate Probability, getting bandied around a lot. And, what does that mean for traders? Like, obviously we're using price action, we're using technicals, but you're going to hear a lot about interest rates and rate cuts. Well, if you think about it this way, the lower the interest rate, the easier the money is, right? So let's say you're a business, let's say you're Microsoft or you're Apple, or Apple has a lot of cash flow, but any one of these large tech companies, tech in particular, they need a lot of money for R&D. They need a lot of money to purchase new companies, to expand, to grow. You have to invest to grow. Well, they don't use their own money to do that. What they do is they borrow money. When interest rates are really high, that becomes a costly endeavor, right? If you're paying a decent sized VIG on the money you're borrowing, it becomes cost prohibitive. But when interest rates are low, and particularly when they're near zero, that's where you get this sort of free money error, right? Where cash just comes in. Tech is very sensitive to that type of, most growth stocks are sensitive to that low rate environment, whereas mature companies that aren't really, they're agricultural or whatever, they're not, putting in huge amounts of investment into R&D or to buying new companies, they're less impacted by a lower rate. So, when just, keep that in mind. You'll see as these rates move, the probabilities move, you'll see that a lot. You watch the price action on the sectors. Look at tech in general. The stronger tech is, the more confident investors are that rates are going to be cut and so on. And then you get into sort of this good news is bad news environment, right? Where this morning the consumer was very strong. But when you have a very strong economy and the consumer is strong, there's not, the Fed wants to keep rates where they are as long as they can, because it just sort of, stamps out inflation. It just, you want to make sure that there's no embers left, that it's not going to pop back up. The worst thing that could happen is they bail early, and it's sort of like you didn't finish your course of antibiotics, right? You got almost to the bottom of the bottle, you didn't finish, and then bam, the infection comes back. So they want to make sure it's stamped out, but they, also don't want to do so at the risk of a recession or hurting the economy. So every time you get these indications that the economy is strong, that's good news, obviously, good news for companies, good news for consumers. But on the same token, it gives the Fed less of an urgency to cut rates. So a lot of that, every year there's the new thing, the war or this or that, or the election. Right now, it's rate cuts. And instead of, I assume most of you are not economists out there. So price action really becomes your guide. And price action is nothing more than what institutions are doing. I trust institutions more than I trust my own interpretation of these macroeconomic events. So price action will tell me what they're thinking. And then obviously as traders, our job is to hop on their coattails and follow their price action.
100% agree. And it's important to keep your ear to the wall, but trust what you see. And so when we see price action like this, where it's just off the charts bullish, these buyers can't get enough. So what changed? Well, the market's moving sideways. It's not gangbusters lift off time right now. So yeah, we've got some bullish swing positions. They were much higher here. Some of them have pulled back. They've drifted down. Now we go into this news vacuum, and all of a sudden, you're not hearing, Jim Cramer or whoever else is on CNBC chest pounding going, the market's making a new high for the month, and look at the video run, and oh my God. And everybody's out there. They got their pom-poms out in here, and they're cheerleading and yeah, boo-rah, market high, go, go, go. And so you get everybody loaded up on their bullish positions, and then the market starts going sideways. Then what do you start to hear? Oh, the Houthi rebels. Oh, yeah. The Red Sea. Yeah, there could be supply disruptions again. And the Fed. Oh, everybody got way ahead of themselves, and we're not going to have interest rate cuts like we thought we were going to have. And all these skeletons start getting dragged out of the closet because these guys are out there with their pom-poms. Whatever the market is doing, those are the headlines that they're going to be promoting. Oh, the news in China was horrible, which China actually is a problem spot. It's been something I've been watching for the last couple of years, second largest economy. So we need to be aware of what's going on in China. But all of a sudden, it's like, oh my gosh, their market was down 2%. Their GDP wasn't any good. And their retail sales were lower. If you look at those numbers, they're just marginally lower. They're not dramatically lower at all. And so what impact does that have on everything that we've seen here? What was the news that drove the market higher? Why did we do this? Well, we did it because the Fed has stopped raising interest rates. They might even cut. Okay, so maybe it's in Q2 that they cut. The economy did not fall apart. We don't have a credit crisis. Companies over the course, so mind you, if we take a look at the high from back here in July and where we are now, we're just a little bit higher, but companies have had all this time to make money, and the valuations are only slightly higher than they were back in here. And we've had a good economy, and the consumer's been spending money. So I'm expecting that earnings season is going to be pretty dang good.
I'd like to point out, Tobias notes and Kira notes in our chat room here that D-Dog seems to have great relative strength here, which it does. A nice D1 breakout. It ignored the drop in SPY in the last 30-40 minutes there. I like D-Dog. I like the long. I'd like to make sure that we're not going to test the lows today. But if I were to go long right now, D-Dog definitely would be on top of my list. And what do you think there on D-Dog there?
Well, D-Dog is on top of my list too in green royal flush. And so let's talk about screen configuration a little bit. I went into this in the last presentation. We've got the searches. The searches put the best stocks in front of us, but then we use these column layouts to really home in on the absolute best picks. Well, gee, look what's at the top. So these are all buy and sell signals across multiple time frames are green. We've got the stock making a new high of the day. That's green. We've got real relative strength across all time frames. We have an outside day, and we have excellent volume. So D-Dog about 2 times its normal average volume. Do you see how easy those are to find? I do have a filter on, but if I take option liquidity off, you'll see that there are more candidates. So yeah, D-Dog actually, look at that price action here. Those are stacked green candles on heavy volume. And that, as you pointed out, Harry, that is a big breakout here. That is a very long term. It is a high plus trend line, but it's almost horizontal. There's not much slope to it. So yeah, this would be a nice breakout for it. And it's got the volume.
Last week at this time, my pick was Pan W, Palo Alto. And Palo Alto, when I picked it, was roughly around 308, 309. It is now at 329, so a $20 bump in the last week on that stock. If you went long and took that pick last week, you would be in very good shape right now. I would assume you would have taken profit already, but yes.
Nice pick. And you had this bullish flag formation right in here. And you can see how since then the stock has actually moved through a longer term high plus trend line as well. So it was able to power through that resistance. And most importantly, what has the stock done while the market's done nothing? So there's the market right there. The stock has actually been powering higher while the SPY has been compressing. Very, very nice. And since we're reviewing picks, my pick was Meta a week ago. And you can see this is where the video came out, and the stock continued to power higher that afternoon. I'm going to call this a wash right now, but I actually view it as victory because the market has been a little bit soft in here. And the stock has still been able to preserve this breakout. It's been able to preserve the gains. And you can see these tails are an indication that they try and knock that stock down. They try and knock that stock down. It doesn't last for long. It keeps bouncing right back. So, yeah, I still like Meta.
Quick question from the
pick for Sunday.
Okay, Pete, finish.
Okay. I was just going to say my pick from Sunday morning or Monday morning during the exchange holiday, I recorded a video on IBM. That stock's been excellent. So just bring a quick M30. And so this is Sunday or Monday when I recorded the video. So since then, from 163 to 167, the stock's been in really good shape. Actually, I take that back. We've only had 2 trading days, but the stock still a couple dollars higher. Given the market selling, I like IBM. I think this stock continues to move higher.
And you have a earnings on IBM coming up in a week. So if you're going with options on that, you're going to maintain your value. Obviously, just make sure you don't hold those over earnings. But when you're using options and you have earnings coming up, the options that close or expire after the earnings date are going to hold their value, right? Because there's going to be a high IV going in. In fact, IV usually will ramp up as you get closer to earnings date. So you're holding value in those options, and you just have to make sure you're closing them before the actual earnings occur. But it's a fairly simple strategy to follow. So the question here: how long is relative strength valid for? Is best practice to use it for one swing, then look for another relative strength stock when SPY drops again? So there's always, there's a lot of articles on relative strength. Pete is the master at it. He's written up tons of them. There's plenty in the wiki. You can have relative strength when SPY is dropping. You can have relative strength when SPY is going up. You can have relative strength when SPY is flat. All it means is proportionally, the stock is stronger than SPY. If SPY is going up like this, the stock could be going up like that, right? That stock has relative strength. Even though SPY is going up and the market's going up, the stock is going up more than that. And the idea behind it is a high tide raises all ships, right? So the market's like that. If the market is going up, about 70 to 80% of all stocks are going to go up with it, simply because there's a lot of buying and ETFs occurring, institutions pouring money into the market. All stocks are going up with it. They're riding the coattails of market. It's like you're a runner and you have a very strong wind against you on your back, right? That's going to push you forward. The market is that strong wind. However, if institutions are in there and they're targeting, specifically buying a stock in greater strength than the market is being bought, that stock has relative strength. And so If the market's going up, the stock is going up proportionally stronger, and then the market stops going up. Let's say you get a reversal, some news comes out, whatever it is, the market begins to drop. The stock is going to be buffered because that stock wasn't being propelled by that wind on the back. It had its own energy source, which was institutions propelling the stock. So to answer your question, stocks can have relative strength as long as they have relative strength. And more than one stock can have relative strength. You could have the market dropping, a stock could have relative strength and it's going up. You always have to take, obviously, the context of the market, because even though institutions can be in there buying, if you have a strong drag down, like an anchor, you might have a strong engine, and that engine is institutional buying, but eventually that anchor is going to pull you back, right? So if your market is dropping and you're buying and you're going long a stock with relative strength, keep in mind that your confidence or your trigger on when you should get out of that trade needs to be a lot more sensitive than if the market was strong at the same point in time. Because if the market is strong, now you have two things pushing it. You have the institutions and the market. So relative strength lasts as long as it lasts. Don't get obsessed with 5-minute bars. Obviously, every particular 5-minute bar or stock can lose relative strength. You need to look at the overall trend.
Yes, exactly. The longer term D1 chart, that's what's going to show you the relative strength. And if you get into periods, I have BSX up. I just happened to pull it up off of one of the searches. Ooh, there's a HA reversal, M5 bullish for AMD. So we can take a look at AMD. Let's take a quick break. I like AMD. I love this breakout through horizontal resistance. This could be my pick of the day. Love the fact that the stocks continue to power higher. We've got earnings coming up on 1:30. All I need to do is hover over the E at the end of the chart. You can see how the stock sold off today, preserved half of this long green candle, and now it's been powering higher. So it preserved all the gains from yesterday. It's at the high from yesterday. What is the market doing? So first of all, D1 relative strength. See the orange line above zero? It's strong relative to the market. It's been going up. The market on a daily basis has been going down. Now, see, market going down. Market's even been flat if you want to take a look at a longer term perspective. Go into the M5, market has been gapping down, and now we're getting a little bit of a sell-off. I do believe this bearish 1OP cross in here is going to produce. I am looking for a new low of the day. The reason I say that is because this bounce has been very wimpy, and we did not recover more than half of this gap here. Mixed overlapping candles, no real impetus by buyers here. Get that bearish cross. Now the sellers have the ball. They're going to take a chance. This opening, this low of the day is likely to be taken out. So I'd be a little bit, I wouldn't be buying in here. I'd be, if I were day trading, I'd probably be looking for some good shorts. But I like what AMD has done. And there you can see they hit the stock, the market gaps down, and then it spends the rest of the day climbing while the market's going down. So I set this HA reversal up a little bit earlier because I like this price action. I wanted to keep an eye on what AMD was doing. So instead of chasing, I was waiting for a reversal. So let's put up some HA candles. And there you can see we have flat green bottoms in here. So everything's looking good. This is a continuation. There is a flat top red. Now HA is bearish. There's a flat bottom green. That is my HA reversal. So if the market had been more bullish and not selling off like this, I would have liked this. Because if I look at that price action and that HA reversal, look at how well the stock has been able to hold gains. If I had a market that was starting to clip higher, I would have no problem buying AMD in here, but not when I see this. So sorry for that lengthy explanation, but yeah, I think AMD could be my pick of the day. So we'll see what else comes up. I did also, I did cover IBM, right? So we're good there.
Taking a look here at some, a lot of the weaker stocks, Crowd, Home Depot, Lowe's, they today, obviously they're looking very weak. But if you look at their D1 charts, not terribly excited to jump in on a short on some of these. A lot of them are all over their SMAs. These are not shorts I'd want to swing by any stretch of the imagination. So I'm just looking through to see if there are any decent shorts here that.
Mara was one that I liked earlier today.
Mara bouncing off its 50 SMA though, which is at 1689.
Yeah, it needed to be below that.
Bitcoin stocks there. I'm obviously short the puts on MSTR, which I'm not concerned about. But there's been a sell the news a bit on Bitcoin going into from those ETFs. So that when that runs its course, it could pop again, it could not. It's I kind of violated my own rule in avoiding Bitcoin stocks.
Kind of taking a look too. I'm just looking to see if any shorts are popping up. It's always good to take a look at the short side. RIVN, I mean, that's a nasty chart. You can see there's a lot of breakdowns that we have. It's below all the major moving averages. The sell-off that we've seen over the course of the last 3 weeks, this stock is drifting lower. So I would not have any hesitation shorting a stock like that. You can see that here's your tell on the short side is that the market bounces for the first almost 2 hours of the day. What did the stock do for the first 2 hours? Well, it had the same gap down. It only rallied for about an hour, didn't recover much of that gap. And then now it's been steadily drifting lower. As soon as the market starts to crack down here and we get that bearish 10P cross, it would have been right about in here. Stock makes a new closing low of the day. It didn't make a new low of the day, but a new closing low of the day. Yeah, this would be a decent entry point. Lower highs, see you later. Good volume.
Look at Solar Edge, SEDG on the short side. Has any stock been more beaten down than that thing? I mean, from a high of around 400, it is now at 68. And that's a very bearish D1 chart here.
Yeah, that is nasty. We've got a couple of trend line breaches here as well. And so in the right corner, you can see the SPY here continuing to drift lower, and we're getting pretty close to that low of the day. So what I'm going to do is I'm just going to set an alert down here so that when we test that low, we will know if we take it out. The danger with the short side right now is that I've already mentioned how we got all these negative headlines, and you would think that the market's down like 200 S&P points from the high based on the headlines that you read right now. But if you look at the daily chart, we've got that compression. So try not to be fooled or lulled into thinking that conditions have changed dramatically. You've got to be able to look at what are those headlines. Is this news really new? Is this new that China's economy is struggling? No, it really isn't. The Houthis, firing missiles on ships. No, it's not new. It's the same old news. It's just putting kind of a dark cloud over the market. But as soon as our good round of news comes, all those clouds will part and everybody will wonder, why did they ever think about getting short right here? And so you can day trade shorts, but I always say only pros should be day trading shorts right now because you're going to trade smaller size. You're going to have more passive targets because you're trading against the longer term market trend and you're going to take less positions in them. And you're not going to overstay your welcome. Because a bad day trading short, it's okay. I got the chart working for me. I'll stay in the position. And then it's a losing position. You hold it overnight and then you get lift off the next day in the market, and you're stuck.
I'm looking here on the commentary on the chat room, on the OneOption chat room for the YouTube, and a little confused by what someone wrote here. Someone said, "What's going on with Tesla?" Well, it's bearish a little bit here, but someone said, "Why don't you put a trend line from the 1027 candle to the 1518 candles? The real way to do those trend lines." I don't know what the hell you're talking about. On Funk is his name. I don't know what the hell Funk is talking about. The top of the 1027 candle does not connect. The only trend line it connects to is to 11.2. And then that trend line gets extrapolated down, and it's still kind of holding. There's only one connect to it. There is no trend line there from the 1027 candle on Tesla. But I'm just kind of just looking at it. I don't get what they're saying. And then that becomes it's been a sort of bane of my existence sometimes, is there are people who get how to do trend lines and there are people who don't. That's what I'm basically figuring out. And those who don't just cannot ever seem to get the concept of them. And what happens is you start writing your trend lines and they're wrong. Option Stalker does them automatically for you. Use those. If you know how to do trend lines, then use those trend lines. But people who try to make their own trend lines but then don't know exactly how to do it, you just wind up screwing yourself up. And then you wind up telling other people, "Oh, this is where it is," as if that is the way to go, but it's not. So it's just I don't know what the hell that person's talking about.
Not sure either. I've spent an incredible amount of time on trend lines, and at the end of the day, all that matters is what did the price action do when that trend line was met. And so we've got 1OTL passed, and I suggest all of you take a look at these past trend lines and see if those trend lines are valid. Gee, was that a good trend line? Hell yes. Gee, was that a good trend line? Hell yes. All that matters is what did price do at that point? And was the trend line a valid indication of where we might find support or resistance or breakout or breakdown? And that's, again, 1OTL past. I'll show you all those trend lines. And on Tesla, we've got a major trend line that's been broken to the downside. That is a very long-term trend line. So I would be going with what I'm seeing right there and the fact that it is below the 100-day, the 200-day, the 50-day, AVWAP E. It's below all of that. So yeah, I would be more bearish than anything on Tesla right now.
Funk clarifies that he's referring to the wrong, that we were putting up the wrong trend line on SPY, and that he was referring to SPY. So I'm looking at SPY, and yeah, you're still fucking wrong. Look at the slope, for the love of God, people. The bottom of 1027, if you cannot connect the bottom of 1027 on SPY all the way up, skip over everything else, go all the way up to 1.8 or 1.5 or 1 anything, you're looking at a slope that is well over 45 degrees. That slope is way too sharp. That is not a trend line. For the love of God, I don't understand. I really don't.
Yeah, if trend lines are over 45 degrees, they're really not considered valid.
No, they're not. They're not considered. Broken. Look, if you can't do algebra, don't take calculus. So just stop. Honestly,
they're very easily broken.
And you guys talk about these trend lines as if you know, and then other people go, "Oh, okay, that's the trend line." Not like Harry or Pete said. This guy here knows what he's talking. You don't know what you're talking to. Don't stop. At least ask it in the form of a question. Be like, "Hey, how about this? Does this work?" Instead of going, "This is the real way to do trend lines." No, it's fucking not. You're wrong.
So just an example on a trend line, you can draw one from that October 27th all the way up through this point right here. And then, oh, hey, look, it's breached. It's breached. Well, it's going to be instantly breached when it's that steep. Time alone will breach a steep trend line, because all the stock has to do is start going sideways to breach a steep trend line. Is that really a breach? No. We're looking for a nice big crackdown. That's the way we like to breach. So yes, if there's a trend line in here, that would be a good trend line breach. And I'm sure there probably was a trend line back in there. Those are the ones that we want to pay attention to. And I could put this up. Yes, there you go. That is a significant breach. That is a significant breach. That is a significant breach. So yeah, anything over 45 degrees, you have to be very, you shouldn't even consider it. It's just not a valid trend line.
Everyone draws trend lines in their own way and timelines. Some do charts, some don't think anyone is right or wrong. Java, you're wrong, because the trend lines are used by institutions. Again, for the love of God, go with people who are proven traders. Go with people who have proven to make profit. If you enter a classroom, do you want to have your lecture given by someone who just fucking failed the course? Or do you want it to be given by someone who is accredited and knows what they're talking about? If you draw, everyone draws their own trend lines, and that's not technical analysis. Technical analysis is based on a majority of the people who are putting liquidity into the market or the stock following the same guidelines of support and resistance. Considering the majority of that liquidity come from institutions, institutions kind of have the say on what is important and not important for support and resistance. The trend lines they use, the simple moving averages they use, and so forth, are support and resistance because that's what they're following. That is where the bounces occur. That is where you stop going up and start going back down and reverse off of those lines. And the reason I get so animated about this is it's one of the fundamental problems with trading. One of the fundamental problems with trading is that so many people come into these rooms, and some of you might have been here for a long time, but a lot of them have just came in a week, 2 weeks ago. They don't know. They have no idea. They don't know who the hell I am or Pete is or whatever. And all they see is what people are posting. And people post with such confidence. This is the way to do it, right? Showing no proof at all that they can trade, showing no proof at all that they're profitable. Pete, Dave, we go through great lengths to prove to you every single day, not that we're 100% on every trade. There's no such thing. Anyone who claims they are is selling you something and full of shit. But that you can see a majority of our picks. Hey, last week we picked this. This is what happened. A majority of the trades that I post, I'm posting this trade with this position size. Here is the exact traded, and you can look up in time and sales and see I have made that trade. I bought 100 calls or puts or whatever, and you see it right there. You can see for yourself, okay, year after year, month after, this person is profitable. They know what they're talking about. That is what you need to listen to, people that know what they're doing. Because if you just go and people are throwing everything against the wall, you're paying for a university where students who failed the class are getting up and saying, this is what you should do. This 2 + 2 = 5. No, fuck off. It doesn't equal 5. It equals 4. Now sit the fuck down and learn. It just drives me nuts because people lose so much money because of people with this false sense of confidence when they don't ever show that they can be profitable themselves. Sorry. Again, sorry. Rant.
It's okay. You have to vent sometimes. When you put your opinion out on the line every day, you have trolls coming in, as Harry mentioned, that they really don't know anything about trading. They've got no proof that they know how to trade, but they have an opinion, and that's all that matters. And so they just start berating you. And it's right now I've been bullish. I've made no bones about it, and I've got plenty of people telling me I'm wrong, and this is a double top lower high, the double top coming off the all-time high. We're going to roll over. The market's going to correct 7%. VIX is rising. How could you not see this? And I'll tell you that what's going to happen 6, 8, 10 months from now is everybody's going to take a look at this chart right here, and they're going to see a drop and a big spike to a new all-time high. And in December 2024, they're going to look back and go, Pete's no genius. Of course, that was a bullish flag formation. Anybody could have seen that. But what you don't see is all the shit that we take right here when everybody's second guessing themselves and everybody's the expert, and and when you have to hold on to a position and you're starting to doubt yourself and you're starting to wonder, gee, maybe I got it wrong, or maybe Pete got it wrong, or whatever your information sources are, you're starting to doubt yourself in here. Well, if you've been buying swing trades in here like we've been doing, you got a lot of cushion in these. So you gave back a little bit of your gains. We didn't expect the market to go straight to the moon. It never does that. Little point back to relative strength. These dips are awesome because these are what tell us how strong the stock is. It's harder to measure relative strength when the stock is going up and when the market is going up. And I wanted to make this point earlier on BSX. You could see the relative strength here. What did the stock do during that dip on a D1 basis? It marched higher. Ding, 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 ding. I want to be long this stock. If my market opinion is that the market's going to go higher, but we're just compressing right now, BSX would be a stock that I'd want to be long. You would have made money on it. So these dips, welcome them. Don't fear them. This is what conveys and provides us with information. I do have a couple questions I wanted to look at. LW is a question that came.
By the way, Pete, keep in mind, Funk is a disgruntled trader, the person who we kicked for 24 hours out of the chat room for being an all-around idiot.
Okay.
Just so you know.
Here we've got LW. This is actually pretty nice compression right in here. You've got a nice breakout. This is from the chat. Let's zoom out and see where these trend lines come into play. That is trend line that's been broken to the upside. This all looks good. It had earnings. It's above AVWAP-E. It's been able to hold well. I like this. This is LW is a nice pick. Let's see if it's got any volume. Hasn't had any volume in here. That alone would not keep me out of the trade, but it would keep me from doing larger size in the trade. And there you can see that it does have some volume coming in today. So yeah, pretty nice. Really had a decent move today. So good pick.
Let me see here. Looks like we're having a little bit of a, well, Target is one of those stocks right now today that has broken through its trend line on the downside, but it still is technically in compression. It still is above all the SMAs. It's very weak today. It's relatively weak, but I don't think I would trust that short at the moment. Looking at Target. Yeah, I would not. I probably would not short Target right now.
Sorry about that. I was looking at questions as well, and let me bring up Target and take a look at that D1. Yeah, it's just starting to kind of get cooking in here as far as, you've got 4 consecutive down days. So not really enough for me to want to short it either, because I still see that there's some horizontal support here that it has to work through. And you were talking on a swing basis, right, Harry?
Mm-hmm. Yeah.
On a day trading basis, if you look at a stock like this, you bring up the M5 chart and this crackdown to a new low of the day. That looks good. It's got some decent volume, but here's the problem with this stock. Every time the stock looks like it's going to sell off, boing. Oh, here we go. This looks like a good sell-off, boing. It's just choppy as hell. These are really hard stocks to trade. What we want is that nice, steady price action, just like D-Dog.
Mm-hmm.
That.
And you can see on a stock like D-Dog, even though it pulled back a bit here, it's still well above VWAP, even though the market's hitting a low of the day right now. So that's sort of if you were looking to go long, although again, I'm holding off on going long on anything until I see this support on SPY hold. Looks like it's still holding, but sellers are really testing this low of the day. You pointed out that you felt we were going to revisit the low of the day, and there we are. Now is a question of whether or not enough buying will come in to hold the line. And in this type of price action, you almost just need, you don't need a huge amount of sellers. You almost just need a buyer's boycott to let us drift lower. So I'm watching this. This is a pretty critical area of 471, 470, 75 on SPY to see where it goes from here.
Yep. So we've got that alert line set that you had pointed out. I also agree. It's got a couple of touch points along the way. It's below AVWAP-Q. So this would be a support level to watch. And I think we're going to test it. This is the key. Remember how I said earlier with the D1 chart of SPY? This is not what I should be focusing on. This is what I should be focusing on, because this sets up this. And oftentimes this tail end price movement is all the traders look at. Look, it's a bullish engulfing candle. Look, it's a bearish hammer. That's the very end of the price movement. That doesn't tell you what's going to happen. This does. The fact that sellers were able to keep a lid on any bounce and the rally just could not get going during a bullish 1OP cycle told me we're going to start seeing some selling. We couldn't even recapture half of this gap. We could not even get back above the prior day's low. That's resistance right now. Let's put our right there. That is resistance. Couldn't even get there. So sellers are thinking, man, I would love to sell at the prior day's low, but it's not getting there. And it might not get there. So I better start selling right now. And so that starts driving the price lower. We get that cross right in here. We're below VWAP. So yeah, I believe we're going to continue to drift lower. The danger today is that we could see sell programs kick in later in the day. To your point, Harry, it's a buyer's boycott. Buyers look at the price action in the market and they're thinking, what do I need to be in here buying today for? There's just nothing compelling. There's no reason for me to be bidding right now. And so they just kind of start softening the bid. They start canceling some bids. Then the programs eventually can start ticking this market lower late in the day. Is that bearish? No, because I can show you in the last 2 weeks a bunch of charts where you get that drift lower in the last 2 hours and it feels like the world's coming to an end because there's no bid out there and it just drifts lower and you think, tomorrow for sure the market's going to tank. And then the S&P's open 20 points higher and they reverse all that program trading that was going on. And you're thinking, that was strange. I really don't get it.
I see a nice alert I'm going to put down on HUM, Humana. I'm going to put an alert at 456. If you look at the daily, you have that gap fill right here. 456, you have now filled the gap. You're returning to a nice bullish upward trend. You have
Can you give me that symbol again?
HUM.
Humana.
You have the 15 EMA on the daily, which comes in at 455.89. And then even if you put a trend line from 1227, a low plus trend line connecting right to 1228, and again 1.5, and then again 1.8, and then again 1.11, that acted as support. It fell below that on 1.12, and that line also comes in right at 456. You have 456 fills the gap, 15 EMA breaks back above what was previously support. So that, there's three different points and today it came up to that point, 456, two times, and got smacked back down a little bit. So if it can break through 456, I see that as a bullish reversal on HUM, and I'm going to put an alert there. Those are the type of alerts. You set them, you walk away, you forget about it. Tomorrow, next day, that pings, great. I can look at that and go, all right, HUM might be a good long here.
Yep, you can see that's where your low minus trend line comes in play, and this is your high plus trend line. That breakdown looked fantastic, and then now we're getting above both of those, and that's also what Harry was looking at. And he's like, "Yep, this is a gap reversal in here." So you get this big move down, and now we're back above it with strength.
Yep.
This gap is filled. Looks like it should continue higher. This is a bit of a bottom picking trade in here. So, this is something that pros should really attempt. I think that novice traders have a little more difficulty with it because we also know to watch for this follow through in here. And if we don't get it, then we've got to be more careful, where most novice traders will simply look at, oh, the stock was at 435 and I get to buy it here. And when it goes back to 535, I'm going to make $100. And they overstay their welcome. So we have to make sure that we're getting confirmation in here, which is what Harry's looking for. And that's why he's selling those alerts.
Getting a bunch of questions, and it just confuses the hell out of me. Asking about Moderna, which I made a trade on 2 weeks ago, I think it was. When I traded Moderna, and I already closed my 90,000 shares and made around $13 in profit or 12 in profit or whatever per share on that. That was a long-term hold. It was a fundamental trade. When I took 100 calls on Moderna 2 weeks ago, Moderna had broken above all of its SMAs, broken above its trend line, was above 115. So I took the calls, deep in the money calls at 103. Obviously, right now, those calls are shot. Nothing, like I said, if I was 100% on every trade, that would be amazing. But I'm about 80% on trades. 20% of the time, they don't work. Unless Moderna has some sort of news release or something that pops in the next 2 days. No, I think those will probably close worthless. Not every trade works. Technically, it was the right trade. My mistake was I probably should have closed it about a week and a half ago, taking the loss, about a 50% loss on it. I held it because Moderna is a volatile stock. It can pop out of nowhere. There's a lot of short interest. If it pops above 101, then it can jump up $7 in a day. Might that still happen? Yeah, sure. It doesn't have much time left to it, though. So I've kind of written that trade off at the moment, but it's not 100% that it's going to die, but it doesn't look great. Again, it's pretty self-evident that those calls are probably going to expire worthless. So,
why did we decide to do the live events on Wednesdays midday? It's a nice break point. Gives everybody a chance to kind of take a breather. The middle of the day tends to be not super active. A lot of traders who are looking for opportunities are trying to get in and out of positions in the first hour, 2 hours. And this is kind of a lull. This is a good time for us to take a look at what the market's been doing, what it might do in the afternoon. It's the middle of the week, so we can kind of get our bearings for what might happen Thursday and Friday. Those are some of the reasons that we decided to pick Wednesday. And it works for both of our schedules.
Okay. Let's see here. Once again, because I see so much confusion still around the issue. To clarifying, in technical analysis is based, all these lines mean they're imaginary, right? They mean nothing, right? But it is based on a communal agreement on where prices probably will not go below and probably will not go above. A majority of the liquidity in the market comes from institutions. Therefore, the lines of support and resistance that they use, which are objective, there is not that much subjectivity in it, are the ones that price action tends to follow. There are exceptions. Those exceptions are on your sub $5 stocks, on stocks that are dominated by retail trading. When it's dominated by retail trading, it's like herding cats. Who the fuck knows, right? But if you're looking at a stock like anything in the S&P or any stock with decent volume, institutions are using already written in, coded in lines of support and resistance, whether those are algo lines that follow very clear rules, whether they're simple moving averages that you can just see watching the price action, it bump off of and back again. That is what institutions use. Technical analysis relies on those lines of support and resistance holding, all else being equal. All else being equal basically means, aside from earnings or a major news release, those type of things can break through technical analysis, and you'll see prices cut through support and resistance like it's butter, right? And the reason for that is when you have those news releases, institutions will override their typical daily trading in out of ETFs and so on, and concentrate buying or selling into a particular company based on that news release. Algos will first react to those news release using advanced NLP technology and AI to, you'll see, like when the FOMC comes out, 2 milliseconds later, SPY reacts. Nobody had time to read that. The algos read it. But then you have human intervention come in, and then they change. So keep in mind, the more you can understand how institutions trade, the better trader you will be. The more you have a mentality of damn the man and screw the institutions, the more you will counter trend trade. Like I saw some Jack Tool go long Tesla earlier, like what the hell? The more you counter trend institutions, trust me, you're not the one who's going to make money in the end. They are. Go and get the crumbs they're dropping from the table. Those crumbs are enough to make a very good living as a trader if you follow the institutions.
Jack Tool. That's a new one to me.
Sorry.
Oh, God.
Anyway, let's see.
I had a question on Workday. That was actually one that I highlighted in the video. I believe you might be long this one as well, Harry. I like it. I think this is a good-looking stock. You had this big gap up post-earnings. Stock is able to consolidate. And again, this is a good example of what the market's going through right now. You get this big move, and you've got some profit takers out there. They take profits. They're happy with where the stock is. They're trying to sell. But you also have buyers coming in. And at a time when the market has started to drift a little bit lower, you can see how this stock is holding that AVWAP-E, and it's been able to work through some of these horizontal resistance levels. There's a high plus and a high minus. You got a little bullish flag formation in here. Yeah, I like Workday. I think Workday is going to continue to move higher, and it's putting in a pretty decent day today. You can see there's the prior day's close. Stock is higher than the prior day's close, with the market down pretty considerably. So that's a great test. Those guys are still out there. The guys buying Workday today don't care that the S&P is down, because this is a 3-hour event. They are looking a year out, and they want to own shares. So it's that longer term money that we're trying to follow.
Someone asked about Apple. I like Workday. I pointed Workday out last week. I think the moment I see the market pop here, I'm definitely going to I should already be long Workday, but Apple to me reminds me right now of Tesla last week. And the reason I say that, and not because I think Apple's going to certainly turn bearish, but last week Tesla was in between a bunch of SMAs, right? It was bouncing around support and resistance. And I commented, do not trade Tesla until it breaks one of those two, right? It eventually broke to the downside. Tesla became a very good short. That's what you need. Here, Apple, same thing. You see Apple has bounced off the 200 SMA 3 times now already. It is still above it. But does that mean you go long? No, because right above that at 182.95 is the SMA 100, another line of resistance. So unless Apple convincingly breaks below 181 or convincingly breaks above 189 or 190, plus you have earnings coming up on February 1st, I would stay away from Apple. for the moment. That would just be my thought process on it. And just quickly going back, look at how SPY today, 4 times now, have bounced off of that trend line that Pete drew earlier that we mentioned. 4 times it bounced off it. That is showing you and illustrating exactly what we were talking about on getting A, trend lines right, and B, look at what institutions are doing. They've clearly drew that line in the sand. Bring it down to here, need more to drift and break below it. It has not been able to. Now, it doesn't mean buyers are super engaged, but you need to have some sellers in there as well, I guess, to break below this trend line. And you can see it bouncing off of it several times. That shows you that imaginary line is real. It's there. Institutions see it. They're following it, because only institutions can make an ETF, the most liquid ETF in the world, SPY, move like that and bounce off the same price point like that. That is nothing other than institutional buying and selling.
Trying to see, February 1st is actually the earnings release date for Apple.
Yep.
That's an interesting day because on the 31st, we get the FOMC statement. So that is going to be a very, very busy week. So we get all the mega cap tech companies, not all, but most of them announcing earnings that week. So we're waiting for that news. We're also waiting to hear what the Fed's going to say about interest rates. And we get ISM manufacturing, we get ADP, we get the jobs report that Friday. So those are the catalysts that have driven the market higher. Those are the catalysts that are likely to push us to a new high.
And you're going to see a lot of, someone asked about what do I pay attention to on the calendar. Obviously, jobs reports, CPI, the FOMC coming out, all of these things are going to be market movers. There are even certain calendars that will rank red, yellow, green, whatever, in terms of the impact on the market the news release will have. Keep in mind, I'm not going to get in politics here, but it's an election year coming up, which means that there are going to be certain indicators, certain polling that is going to affect things. The Fed's decisions on cutting rates could be seen as political at a certain point. All of those things, it's going to be a tangled web that I'd advise all of you to avoid. I care about perception, reality, obviously. Look, reality is consumers are stronger now than they've been in like a decade. Unemployment very low, jobs are up, wages are up. I mean, in a vacuum, the economy looks very strong, particularly with a 5% interest rate price. But if you ask people, and inflation now is at a lower point than it even was 2 years ago. But if you ask people, most people say the economy is not doing well. So there's a perception problem between Wall Street and Main Street here. And that's worth noting. But what really matters is the Fed is very perception conscious right now. Jerome Powell wants to be remembered not as the person who screwed up and said inflation's transitory, but as the person who threaded the needle perfectly. And, all these things are a million little factors, which is why when you play armchair economist, you can get yourself in a lot of trouble. Again, keep hitting back on it. Institutions. That's what matters. SPY just broke above VWAP here. Nice bounce off the lows. I might actually see this as decent price action to look to start maybe getting long if we can confirm above VWAP.
Yep. So we've got a bullish 1OP cross right here. We have a higher low, although for all intents and purposes, we basically checked the low of the day, finding a little bit of support. What would I like to see? I'd like to see a couple of nice long green candles in here and some decent volume to tell me that, yes, this level is going to be defended. If you've got the right stock, might as well take a look at AMD and D. Let's take a look at TMUS. I just brought this chart up. This is the Green Royal Flush Search. I'd mentioned to you how nicely the columns work. There you can see all across the board, green dots. Blue dot here shows me I've got real relative volume on a M15 basis. So we'll go into that 5-minute chart. Stock is breaking out to a new high of the day. What did TMUS do during this market decline that lasted over an hour? It compressed. It could not get knocked down. I like TMUS right here. I think it continues to move higher. I love that D1 chart. D1 chart, you've got a stock that had been very choppy in here. Got this nice horizontal breakout that compresses. So there are sellers in here who are normally used to seeing the stock waffle back and forth trying to take profits, but buyers are getting more and more aggressive. They're wearing off this supply, and then the stock releases, get a pullback, beautiful little bullish hammer in here, stock rallies up. Now you've got another compression. Now you're starting to break out when the market has been weak. I like it. I think it looks
We're at
good.
an all-time high on TMUS, aren't we?
I believe so, yeah.
I love stocks at an all-time high. I do. You have no bag holders up there. You have nobody who's been waiting for the stock to come all the way back up there. And now they can sell, break even, get out. There's no anyone buying or bought TMUS today is in profit. They're not holding any bags on this. So I like stocks at an all-time high. I like TMUS. I think that's a great pick. In fact, I might go long on TMUS here if I can see some confirmation over VWAP from SPY. That might be the pick of the day for me here. I like TMUS a lot. Nice pick. And
there you can see D-Dog. So D-Dog, power's higher. Okay, I'm not going to chase. I'm not going to chase. I'm not going to chase. So what do you do in this situation? You don't want to keep chasing up here. You need some kind of pullback. And you can see in the chart, this stock tends to pull back. It does not go in a straight line. It pulled back earlier today. Right click, create alert. You can look for a 3-8 cross. You can look for it to go relative weak, relative strong. Actually, let's pick that one because real relative strength. Strong versus SPY M5. We're going to add that, save it. You can see how it's negative and it needs to go positive. Well, the server already knows that it's negative, so it just needs to go positive. But if I would have set this alert in here when it had real relative strength, then it would have had to wait for it to go negative and then positive. So the advantage is that with one variable, I can evaluate how deep this dip was. Is this something I need to be concerned about? Because the market has been going lower, lower, lower. What did the stock do? No, I'm not concerned about this. Well, why not? Because the stock is still above the prior day's high, which was considerable. The stock is still way above VWAP. The stock found support way before the market did. These are all really good things. These are things that tell us that this stock looks decent. So when you get that alert, okay, I've been able to wait. I didn't chase. I didn't get FOMO. Now I got the dip. Now I got the alert. What did it do? Yeah, I feel pretty comfortable with that. So in any event, that's how you use the alerts. My point really was, how do you set alerts? How do you avoid FOMO for a stock that's really running? That's a great way to do it.
Someone asked in the chat about ANF, Abercrombie and Fitch. This stock has had a 140% rise since August 22nd, but it's not been a parabolic rise. It's been a nice steady climb, a very orderly climb. I like the chart. I think everything on it looks good against another one at an all-time high here. However, I would set, the all-time high I think is 99.08. So I would set the alert right around 99.25, somewhere around there. Let it break through, let it go and break that. And if it could break compression, then I think ANF continues to be a good long. That's one where you look back and you're like, damn, I wish I would have got it at 42. But yeah, it's very nice orderly rise there. It just seems like, you just have steady buying constantly coming in. So
those retail stocks too are so volatile and they're a mixed bag. You can't look at that sector and put all those stocks into the same bag like you could with like let's say a computer manufacturer like Dell and Hewlett Packard. They're going to move pretty much in tandem with each other. But that retail sector, you have dramatically different results, one company to the next.
And now we see SPY going.
SPY's really not doing a whole lot right here. We've got this nice little breakout above VWAP. Now we've got the red candle in here. So I'm going to talk a little bit about another pattern that we could see today. I'm still pretty bearish on this. I mean, we talked about needing to see some stacked green candles to get me bullish and to challenge this high right here. But what could happen here, very likely in my opinion, is you test the low, you bounce, you test the low. Now all of a sudden buyers that are in here buying the low, and this is typical of traders, is you buy here because you can have your stop just below there. Keep your stops very tight, and then you've got unlimited upside because you entered here. Got tiny little loss potential, but lots of upside. So what happens is that eventually, as you start resting on this spot with greater frequency, now all of a sudden the programs will eventually try and take that level out, and they'll try and trigger all of those sell stops, and you get a nice long candle down. What happens after that long candle down is very important. Oftentimes it's just to shake out those stops, and you'll get an immediate rally right back into the trading range. So you need to have follow through to that candle. Then you can be fairly certain that this is all pretty legitimate selling pressure.
I mean, think about it, what Pete was just saying. Imagine you're playing poker and you know the exact bet you have to make to get the majority of the table to fold, right? That's those stops right there. And if you knew, all right, if I go and bet 80% of the pot or whatever, most of these people are going to fold their hand. You're going to make that bet, they're going to fold. The market, or when I say the market, institutions knowing where those stops are, knowing, okay, we've tested this horizontal line on the 5-minute. We see this upward sloping trend line on the daily. We see the bounce off of it. We know there have been buyers coming in here, as Pete said, and they're probably putting their stop right below this line, maybe 20, 30 cents, whatever it is below this line. If they can drive the price down to trigger those stops, you're going to get that long red candle. That means if you are an institution and you're short there and you're buying it there and you hit the red and bam, stops get triggered, you hit the long red candle. Now the question is are they then grab their profit, jump back up and drive it back up again and start buying because now they got that lower price, or do they continue to drive the price lower? As Pete said, that's the key, right? If those stops get triggered. Still, that support line continues to hold. The more it holds like that, the more stops are going to be loaded up there. So, how many more tests does this have before we break through and trigger those stops? I would say if we do not rebound here and go way above VWAP, we might be looking at that trigger happening sooner than later. But right now, we've got another bounce, another hold, same support line. We'll see what happens.
Yeah, and so on that big drop, what you'll also have is traders who are oblivious to what we've just talked about, that this is hunting for stops and trying to trigger stops. And what they will see is they'll see a long red candle through support, and they'll go, aha, I'm going to get short too, because this is the breakdown that I've been waiting for. And so they get short on that long red candle, and then the next candle is a green engulfing candle, and then another green stacked candle. You're right back in the range, and they're down 10 or 15 S&P points going, what the hell just happened? That was such a beautiful breakdown. Yeah. That type of knowledge comes with experience. I've been trapped there so many times, and I'm trying to pass this knowledge onto all of you so that you don't make the same mistakes that I've made. Harry is trying to do the same.
It's difficult because on the surface of it, what we're saying is not brain surgery, obviously. I mean, it's like, here it is, okay, and it's just a matter of trusting and believing that that's what's going to happen. But the concept of trading is so elementary, buying, selling, up, down, that people believe that they can reason it out themselves. Here you see now, watch SPY coming right back down to test that line. And if we break through it, let's see if we get that trigger of all the sell stops getting triggered on a breakthrough of that line. That breakthrough would come through right around 471-ish, 470, yeah, right around 471. So if we can break below 471, you might see a huge red bar here, triggering those sell stops. And then it's a matter of, will it reverse and bounce back up? Here we go.
Yep. And if that happens, then your line, SPY just breached below the trend line alert that I drew on a D1 basis. And that was one that you had referenced earlier. And we'll take a look at it. You know, this is actually a secondary line that I drew on a D1. So this one hasn't been triggered yet, but it's going to be. It's very, very close right now. So we'll see what happens in here. My tell is that they couldn't get any lift in here. These are mixed overlapping candles. This is a wimpy attempt at a bounce. The volume's starting to dry up. So it tells me that there's not a lot of buyers out there willing to defend the market in here. So we've seen some selling pressure, you know, yesterday and the day before. So yeah, let's get this done with. Give us your best shot. Let's see what you got and see how far down the market goes before we find those buyers. Great time to watch your really bullish stocks and see what they're doing.
And this is also news events. You take a trade, they go long, and they're like, it feels like every time I go in a trade, it reverses on me. And if I just did the opposite of what I was trading, I'd be. No, it's because you're not paying attention, for example, to something like this, right? You're not realizing, okay, as strong as this stock is, as strong as TMUS is, that is not the time to go long. The time to go long is if you see this break of the trend line, if you see the sell stops triggered, and then you see a strong reversal, it takes you all the way back up to VWAP and through it. Now is the time to start going, okay, we got the sellers out of the way. Sell stops have been triggered. Now's the time to go long. But unless you knew about that, unless you took that into account, it'll just appear to you, I went long on a strong stock and it reversed on me. Why that happened? Well, we're telling you why. We're showing you why. Trading is hard enough without handicapping yourself and not knowing and being aware. And there's nothing more important to be aware of than the market. The market itself is more important than the stock that you are looking at. You need to first make sure you have an understanding of what's happening in the market before you even think about buying or selling on that particular stock.
Exactly. We are trading the market, but we are riding the fastest horse. And there's an edge to that. Just looking for a short to see if, this is pretty nice. UAL, I kind of like this. I just happened to look in Red Royal Flush. You can see we're below a VWAP-E. We're below this low plus trend line. Long red candle 2 days ago, which, by the way, in the new version, strong versus SPY M5. So D-Dog is actually moving higher, and it just triggered that alert that I said a little while ago. We're not going to take a look at it because we've got a new low of the day right here on the SPY. So we're heading down. Yeah, UAL would be a stock that I would try on the short side. I like the D1 setup. I also like the M5 setup. You can see how the stock has been steadily drifting lower since the open. So market rallies up, pulls back, not the stock. You had some pretty weak price action previously. They try to rally the stock up early, and the sellers are just playing whack-a-mole with it. New low of the day. But you got to be nimble on your shorts right now because you're trading against a longer-term market uptrend. And that's why it's not that Harry or I wouldn't take any bearish trades. It's that as soon as we start talking about bearish trades, we know we've got a lot of people who are going to be following those trades, and they're going to overstay their welcome. They're going to lose money on that trade if they stay in too long. And so it's easier if we feel the market's going to go higher, D1, to just focus on the longs, be in a long only mode and really look for those opportunities. Even yesterday and the day before, we had this gap up. Okay, well, we're not going to chase that gap up. We're going to wait to see what this bearish cycle produces. Well, the market pulls back, it fills the gap, and now we've got a double bottom higher low. All right, that's enough for us. If we're long only and we're looking for some day trades, this is when we want to take action. And if you're finding the best of the best, that's an article that I wrote a few days ago. You did really well on those trades.
Market's just sitting there right now, right at 471.
Yes, it is.
We're just waiting.
So I'm going to bring up a couple of charts, see what AMD did. It's pulling back, so it's not go gangbuster, gotta have it. If I go into that royal flush here, I'm looking for what stock is making a high of the day. And I can also go into custom search, so let's do that.
MSTR is making a high of the day, I'll tell you that.
I'm just going to mark new high of the day. That's the only search criteria I'm going to use. Good option liquidity, because we all need good option liquidity. And how about a stock that's above the prior day's high? I don't know if anything's going to come up in this search, but if it does, these will be stocks that are worth looking at. So there we go. GT, UNH, GT. Look at that. That looks pretty dang good. I don't know what the daily looks like on it. This is Goodyear. Yeah. Not that great. Could I day trade it? Yeah, maybe. This looks good. This tells me the stock wants to go higher. UNH we've talked about. Look at that stock. It's continuing to power higher. D-Dog, I just got that alert on.
There's your sell stop. Spam. Just got triggered. Look at that. Look at them drop.
So we got, let's try and wrap up in the next 10 minutes or so. Yeah. We don't want it to drag on too far. But yeah, so what you're looking for is you want to see this long red candle. You want to see continuation if you're shorting. Okay, so you want to see drip, drip lower. You can get a doji. You can get one sideways candle in here. You don't want to retrace very far. And then you want to see within the next 2 or 3 candles, another red candle. So you want to make some progress. What you do not want to see as a short here is a long red candle and then maybe 1 or 2 tiny little red candles and then a long green candle that takes you back into the range, because that would signify that this is nothing more than shaking out stops.
I'm going to take a guess, just, it's 50-50, but I think that's what you're going to see. I think that this is shaking out stops here. I think we paraded around it just enough. And I think you're going to see a couple of small and then bam, I wouldn't be surprised if we're back above VWAP. But again, take that grain of salt. That's sort of just my thought process on it. But we will see. But this is exactly the price action. Now, keep in mind, we have illustrated in play-by-play SPY for you. We showed you where support was. We showed you we told you what would happen if support was broken with those sell stops. Everything we have said, it was telegraphed out step by step on SPY. We held off on going long on strong stocks because we wanted to see if this pattern would play out. It is playing out. Now we're going to be a little bit more patient, and we're going to wait to see, is this pattern going to be reversed? Did they do this just to clear out stops? Or is this truly a bearish trend day where now that we've broken through support, we're going to continue down? That's going to be revealed in the next couple of candles. We will see. It's not going to take a long time for us to figure out where we're headed. But just remember how we detailed out everything. And then you see it happen in real time. That should trigger for you, okay, these people know what they're talking about, listen to them. Unless someone can do that for you, whether with their live trades or what we just did, listen, it's your money, but don't listen to those people.
I had a question on DV. Not real familiar with this stock. It looks okay. You had a nice pullback here. SPY has breached below the trend line. Look at that. Now we're through that trend line that I had dropped on a D1 basis. So we'll go back and check that. And yes, that trend line that I had drawn from here through here has now been violated. So yes, that's significant. We'll see if the market picks up some steam here or if that might have provided support. But DV, to get back to that stock analysis, it looks okay. The fact that the stock ran up here, had a really nice rally, and it pulled back pretty sharply. I mean, that is from $38 down to $33. It's a pretty significant move. It bounced right back. So you've got a bullish flag formation. The stock today looks really good. So this is nice. It's got decent volume. It's filling in some of this gap way back in here, trying to get through this resistance level. So yeah, above $38 is where you'd want to have it. And right now it's at 38. So I would not chase it in here. Good thing to do. Right click, create alert. It's raw. Right now it's strong relative to the market. So I'm going to use relative strength. And I'm going to say I want it to be strong versus S&P 500. Again, it has to go down negative, then it has to go positive, then it will trigger. And during that time, how big was the decline? So while I'm waiting, did it check the AVWAP? Did it barely pull back at all? What is the market doing? Is the bottom falling out of the market? If it is, I'm going to be very happy that I did not take a long position because the market will have turned bearish. The alerts don't cost you a penny, and they provide you with an opportunity to evaluate exactly what's happened when the market is pulling back. No emotional attachment. They're not taking up any of your capital in your account. You look at it, you get the alert, you evaluate, you go, yeah, this looks like a reasonable dip in a longer term uptrend. This is a good entry point for me.
All right, just some advice for some people. If you want to get your questions answered, the best way to get questions addressed and answered and noticed, don't just say, hey, what do you think about Microsoft or whatever? Tell us why you like it. Tell us why you don't like it. Tell us, I'm looking at the daily chart. I see it broke through support, but it's done that several times in the past 2 weeks. How do I know when confirmation is? I thought it was confirmed several times before, and it kept reversing on me. What should I do here? Give us the thought process. Give us the reasoning behind it. If you're wrong, you're wrong. If you're right, you're right. But we'll address that. If you just go, hey, what about this stock? What about that stock? You're more likely than not going to get your question asked. And if you ask about something like, that's already been covered in an article or in the wiki, you show that you've done some research, show that you put the time in. Again, this is a career. This is a job. If we spoon feed it to you, you're not going to go anywhere with it. You might make one good trade and then you'll think you're fine. And then off you go and you'll lose your money. This requires time, dedication, effort. So show that you're putting in the work. Anybody who shows they're putting in the time, the effort, the work, the thought, we're going to help. We're going to take the time out of our schedule, of our time to help you and give you full, complete answers to the best of our ability. But if you're just tossing things out there, you might get a quick answer, but trust me, you're not going to get your proverbial money's worth by doing that. So that's just my advice. Anyway, I think we've probably worn out our welcome now enough. Keep an eye on SPY. Let's see if we rebound. But it's been a good talk, a good day, and a nice mapping of the trend on SPY.
So are you going with TMUS? If you're not, I am.
You know what? Nothing stops us from both going with it. But you know what?
I think
we
we
sound
are.
odd, and it kind of. I still like your last week's pick. I still like Meta. I like the relative strength it's showing here. I like the format. I think Meta is on the verge of launching. I like Meta here. I wouldn't like it until we see market strength, so I'll caveat that. But if I see market strength coming back, if I see tomorrow or later markets going back over 474, 475, I'm going to go long Meta all day long.
And look at this compression right here. during this market drop that we've seen during the last hour since we started, it is compressing at the high of the day. It's got a long bullish hammer right here on a D1 chart. They keep trying to knock it down and they can't. That is a sign that there are buyers in this stock. So yes, I still like Meta. I still like IBM. That was the pick from Sunday. I like that stock. I also like AMD. Look at how well AMD is holding all the gains from yesterday. Now, when would I want to enter AMD? Well, I want half of this long green candle preserved, first of all, which it has been. Second of all, I'd like to see the dang market turn around a little bit in here. That right now is keeping me from wanting to take any long swings. Let's get out of this compression. Let's get closer to those earnings release dates. I did have a question regarding news. What is the big news that we watch? Realize that the market is driven by a few things. One is interest rates. One is earnings. So we've got earnings season coming up. Those are the really big news events that you have to be watching. We've got the FOMC coming up. That's your interest rate component. As far as economic releases, the jobs report is the granddaddy of them all. That's a really important one to watch as far as releases. It does change a little bit because CPI has been a big number because everybody is very worried about inflation. But those are the really big news events that you have to be watchful for. Fed speak, always important because that impacts interest rates.
I want to address two really quick questions here because I said I would. Doug, you're struggling with a mindset behavior reflecting that of a gambler instead of a calculated trader. One, great that you recognize that. Remember, a gambler doesn't want to win. A gambler wants the sweet, horrible caress of hitting rock bottom. Every gambler wants that. It's deep embedded in them. It's not much. It's a disease. However, you know what helps? I'll tell you what helps because I'm a gambler. I'll tell you. You know when you're gambling. You know when you haven't had those check boxes and all that, and you're thinking, damn, this is a good time to ride in a video short, or, ooh, maybe I'll go long Tesla here. Say it. Just say it out loud. Don't say I'm taking this trade or I'm going long Tesla. If you're in a chat room, or I am going to gamble on Tesla. I am going to gamble on NVIDIA. If you say it out loud, trust me, it will impact your mindset and it will refocus you to at least there's something about publicly acknowledging I'm doing the equivalent of a scratch off ticket here. Fuck it. That is going to rewire you. If you have to verbally say and type out, I am gambling on this each time, it is much harder to do it. But until then, look, rock bottom isn't all it's cracked up to be. And then finally, someone asked about cost, and because you say cost hit an all-time high, pulled back, and it's not headed to the trend line. I like cost. Cost is fine. My problem on cost is look at that dramatic drop in the ATR. If you go back to the beginning of January, this thing had an ATR of 12.5. It's now 8.5. Look at the size of those tiny candles on cost. Something is going on there, and it's not a ton of buying coming in. Some reason this hesitation, but you do have a very clear line in the sand to put here, which is the all-time high, 686. Put your alert at, you've been given some room, 688, 689, and wait for that to be triggered. If that's triggered and you get decent volume, sure, cost becomes a good long. Do not go long on cost until you trigger and go above the all-time high again. That's it for me, everyone.
All right, I'm going to add a couple of closing notes too, as we've got the follow through that I had mentioned. So far, we're starting to see this breakdown. There's your long red candle, the actual flush out. Now what you want to see is you want to see a couple of continued red candles in here that add to this drop right here, and then a gradual drift lower. This is one of those buyer boycott days where I think the programs are going to be able to take over and just drift this thing down into the afternoon. The only thing I'd be watching for right now is that long green candle. That's the spoiler for a bearish trade. Going to UAL, that was a stock that I highlighted as a potential short. You can see what that's done during this market drop, and whoosh, there you go. Thanks so much for watching, everyone. We tried to get to as many questions as we could. We will do this again next week. Harry, thanks so much. We'll see you then.
Thanks, Pete. Bye, everyone.